Hey everybody, welcome to This Week in Pre-IPO Stocks podcast. With me, I got Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Clint Sorensen, Chief Investment Officer at WellShield, an outsourced CIO and investment research company. Okay, today we got three topics. We'll talk about ByteDance financials. We got some weight loss drugs, which are all the rage on the Upper East Side. I don't know about you, Nikki, but I'm hearing about them all the time. And then FTX and Anthropic. So, all right, let's dive in. So ByteDance is a monster. Okay, they just announced, published some first quarter numbers. Actually, they're like buying stock from the employees, their U.S. employees. So like numbers are starting to like trickle out there. Let me read you some. So they're going to do $24.5 billion of revenue in the first quarter this past year, booked, right? They have $6.8 billion in free cash flow for Q1. $2.7 billion of profits. They have cash reserves of $30 billion. Okay. So as a point of comparison, Meta, Facebook, right? Meta has $28 billion of revenue, Q1 revenue. So this company's like quickly approaching Facebook-like revenue numbers. It's nuts. So ByteDance has a $211 billion valuation. That's the number, kind of, I'll call it last primary round, and then layer in Nick's secondary market activity, right? Gets the $211 billion. And Meta has an $820 billion market cap, right? So ByteDance, for those that don't know, is TikTok, right? That's their TikTok US entity. They have a huge business. Yeah, you know it, Nick. Like Nick's very good at this TikTok stuff.
Oh, yeah.
The ByteDance is like, they have a very big business in mainland China and other parts of the world. But thoughts on the size of their business? This is like kind of the first glimpse I think a lot of folks have got into ByteDance. So thoughts on the size of this business? Does that kind of change your perspective about things? Like Nick or Clint, what do you think, man? What do you think?
I think the company's cheap, right? I mean, at the end of the day, we talked about this. I think it was a while back, but we were talking about ByteDance and the whole TikTok ban potentially or whatever. But I mean, I remember during that episode, we discussed a lot of the far-reaching applications that they do for education and everything in mainland China. And it's just such a big company uniting people and building a community. And now they're printing numbers like this. They got a ton of cash and they're cheap relative to the nearest kind of community comparison, which I think Meta is appropriate.
Yeah.
So look, I think this makes the case for global pre-IPO equities. And I think, just like in public markets, like when we look at capital market assumptions, we have Jeremy Grantham said it. I don't know if you saw the podcast, but he said no one should put their money in the U.S. And I think he meant, the S&P 500, not to put words in his mouth, but if you look at like the S&P 500 from an expected return perspective, and you look at like emerging markets, it's vastly different, right? You're like sub 4% nominal expected 10-year returns in the S&P, and you're like above 10 nominal in emerging markets. And I think that's translating to the private markets as well. So great numbers, great performance, incredible reach, credible growth story. Yeah, I'm a ByteDance bull.
Okay, so Nick, to Clint's point, like appears to be undervalued, right? And these numbers are like super bullish, as he just said. Do you think that the reason that this thing doesn't have like Meta-like valuations is either one, because it's still private, or two, it's like China and there's just like negative halo around China these days? Like what do you think on kind of the valuation depression, if you will, for that business?
Yeah, it's super interesting what we're observing, because you've got like three different price points. And I'll go from largest to smallest. You've got the share buyback within the company that's going to be like your $300 million, as I think what was reported in the article that you're referencing. Then you're having where a lot of the mutual funds are actually marking it, which is a bit lower, and then even lower than that, more about the 210 mark, is what we're seeing in the secondary markets. So why is this such a wide dispersions? And actually, even the trend differs. So I think the private markets are pricing it incredibly cheap if you're putting those other two into context. And it's been on the downward trajectory. It's kind of leveled off.
Yeah.
But you're even noticing like the mutual funds are valuing it higher and higher quarter on quarter. And this news that's coming out, I think it's spelling the same growth story that you and Clint are putting out there. I think this thing is cheap. Not that I think we can we can trust there won't be government intervention. There definitely is a hell of a lot on the Chinese side, right?
Sure.
And that's probably part of the reason it's performing so well, and nobody's having the same turmoil that like Ant Group had and things like that as of
Right.
yet. But I mean, even when it got put before Congress, we talked about that maybe however many months ago it was. We saw some adverse performance because of that. And if that doesn't kick in, this thing's a buy.
Yeah.
I think it's operating at like similar revenue numbers to Facebook, if those are reliable, plus it's valued at a little over a quarter of the value, and it's definitely got better growth, right? So
yeah. Screaming buy. Yeah.
Yeah.
If Meta's a good comp, it's a screaming buy for sure. Yeah.
And a lot of people think Meta's a buy.
Well,
right? A lot of people think Meta's cheap. So I'm thinking, wow, this is pretty amazing.
Well, there you go. Just short Meta, long this. If you can compare it, or if you're thinking Meta's cheap, then go for both. But like at least it'd be a nice complement to the portfolio, both on a country diversity risk, private versus public risk level. It makes some sense.
Yeah. Well, what's crazy too is my understanding is that TikTok, the U.S. business, is a very small percentage of that 24 billion. Like most of that revenue is coming from mainland China, which I think kind of blows my mind. So that to me further supports this concept of it's undervalued, because if it's this negative halo from kind of U.S. regulation, it's not even that big of a contributor to overall revenue. I mean, that kind of begs the case. It's like, it's a screaming buy. So ByteDance, man, it's an interesting company. I'm like I'm an old China guy with the crane shares ETFs thing, right? And I like to think I know a little bit more about China than most, and this company's a monster, and I think it's only going to get bigger. So it's going to be interesting to see what happens with this valuation. But
and I guess the one thing I don't know well enough is the macro trends in China could be participating on the downward trajectory on the private markets, right?
Fair point.
It's still kind of a why is the company itself valuing so much higher? Why are mutual funds valuing so much higher? And what is actually happening on the ground where people are putting money up in between rounds in that secondary space?
Those mutual fund marks, Nick, come on. Those are smart people, right? I mean, we're talking like what? I don't know who owns it from a fund, but it's probably like the Fidelities, the T. Rowe Prices, like the usual suspects, right? I mean, those are smart people. If they're saying that this thing should be worth more and they're marking it up, it's something to really take a look at and acknowledge, right?
Yeah, it's interesting. I mean, you're going to have like Variable Insurance is one of the big holders. They hold it at the highest mark out there right now, I think. T. Rowe Price, Bright House Funds, but even some of the dispersions between where they're valuing it. Actually, Fidelity is the highest marked
smart
level.
I've heard of that company.
Yeah,
smart company, smart people.
They typically know what they're doing.
Yeah.
So this could spell a number of things. It could actually be the funds gearing in line to where a future round or liquidation event is going to occur. We do see that. We saw that with the funds aligning to Databricks at the valuations. So these are very smart people, and it's just a matter of, okay, you have three very different valuations in the market. Which one or which blend is accurate? But we're seeing a big disconnect here.
Yes.
Sure.
Oh, listen, this is going to be interesting. We'll come back to this one in future weeks and months, because I'm super intrigued by ByteDance. But let's talk about these weight loss drugs. Okay. So first of all, I know a lot of people taking them, right? It's wild, and they're like losing a ton of weight. So there's Wegovy, Ozempic, I think I'm pronouncing that right, and there's a handful of other ones too. But ultimately, just like basically makes the person stop wanting to eat. It also looks like it's helping with smoking and alcohol. So just generally better health. Right?
It's general with this compulsive behavior, right?
Right, yeah. Exactly. So, but what's interesting is there's a couple interesting like applications here. So one, I think these drugs like highlight what's really interesting, and kind of like these emerging pharma or biotech companies can like have on society, right? So new pharma, new, kind of drugs come out, new biotech. I mean, there's a ton of stuff around food. There's tons of stuff around curing cancer and other diseases with these kind of new emerging stuff. We don't talk a lot about it on the pod, but I'm like watching these companies like start to emerge, especially on the pharma side. It's like heavy capital, like nothing's exciting until all of a sudden it is. And it's like this stuff, it's like, wow, everybody's using it, you know? That's interesting. So I'm kind of interested to get your guys' thoughts on that. But then also too, like companies are starting to come out with like they're referencing the stuff on their earnings calls. So like Walmart brought this up that they're like they had a correlation for people taking these drugs. They're not buying as much groceries at Walmart anymore, right? That's a crazy use of data and kind of tracking. So super interesting there. So that's I think compelling. Also, United Airlines came out and said that if all of their customers on average lost 10 pounds, that they would have $80 million dropped right to the bottom line. So it's getting brought up. These two drugs are not bringing up, like CEOs are talking about this stuff on earnings calls, right? So kind of this innovation that's happening through pharma and biotech, which of course AI is going to have an impact and all this stuff, right? So anyway, I'm talking too much, but like, let me ask you guys, have you heard of these two? Like Nick, have you heard of these two, like these weight loss drugs? Like, what do you think? Do you think this stuff's getting overblown, or do you think it's spot on?
I feel it's unfair when you ask me these. Of course, we're in Manhattan. Like, everybody's clued into these things.
Yeah, it's the height of vanity. Yeah.
I have. I'll pitch it to Clint because I don't know. Maybe it's not quite the same. And I was just in San Francisco and LA, and if you're going to pick three cities where this stuff's going to be popular, well, I guess maybe less OSF, but who knows?
Yeah,
it's going to be there.
Yeah, Clint, what do you say? You got to hear anybody?
I mean, I've heard of it. Like I've got a family member, an uncle, and I'm not going to mention who, obviously, but an uncle that's on it, and he dropped a bunch of pounds, and thought that was pretty interesting. And then I started reading up on it. Reading what there's some potential side effects. Obviously, it's a new drug, so. Some people are saying it's a lot of muscle loss instead of, targeted fat loss. And, but it does obviously help with compulsive behaviors, which I think, or at least that's the evidence out so far. And that's never a bad thing, in my opinion, when it comes to society. It might be bad to corporations that tend to benefit from those compulsive behaviors, but I think ultimately that's a good thing for society as a whole.
Yeah. Well, it's interesting. I mean, the pharma biotech stuff, and I'll do a better job of bringing up some of these kind of emerging companies that are coming through. But there's some really cool things that are happening in that space. So this is just one example, I think, of a new drug, right, that can have a major impact on society. And I think we're going to start to see more of this stuff happen over the next 5 to 10 years. I don't
life
really.
Sciences is super interesting. We cover a lot of tech and tech applications, but life sciences in general is such an interesting arena.
You like that asset class, Clint? You like life sciences as an asset class?
I do, right? In venture, right? In something where it's all about position sizing, like everything else, right? You're going to have a lot of failures, but you've got such huge asymmetry that, if you position size properly and you've got good managers or, good analysts to help you select the right criteria who have backgrounds in biotech or, biochemistry or medical field or what have you, I think it's quite fascinating.
Yes, that's right. I mean, Nick, do you guys have any life science company? You must have life science companies on AFU, right?
Not so much. And
okay.
And I'll hit back on this because it's kind of interesting that the way we have observed it is maybe some of these companies are VC backs from an early stage to get the wheels in motion, but at such time, I feel as though it's less equity driven from a funding perspective, and they're getting a lot more in terms of debt investment, more
sure.
on the alternate side of the spectrum where we would never see any activity.
Got it.
So I'm curious what you guys are seeing, but you're not getting a lot of late stage VC styled investing into these companies because they're so nuanced and there's so much going on there that you're not going to have a VC that just has a ton of PhDs sitting in house.
Right.
There are some and there are a few that I know up in Boston, Cambridge area for sure. But I think the way they get funded is a fair bit different than your traditional tech company.
They get bought too, right, Nick? I mean, they don't go public. They Pfizer buys them or something. Yeah, right.
Super early stage businesses.
Yeah. And they get bought probably before they even if something starts to work, somebody comes in and buys them. You know?
I think that's a huge part of the the dynamic, right? Because what is you've just come up with the new cure for polio 2.0, right? And what is your dream? Your dream is to get that to market and save lives and save people, or allow people to lose weight and present a big moral hazard for Walmart that all of a sudden wants you to lose weight, but then kind of wants you to buy a lot of food in the same store, and
that's right.
all that, right?
Now what do you do? Yeah,
I love that. It's just
right.
But yeah, if you want to get your your products in the hands of the masses, the best possible way to do it is to get probably gobbled up by a Pfizer or Bayer or similar, right?
Especially with all the regulation. Yeah,
whereas a tech company may just want to rule the world and become the next Uber, become the next SpaceX and the like, and do it on their own terms.
Yeah.
So I'm curious if you guys think differently, or there's another dynamic that I'm missing, but we definitely don't see much activity on the late stage end of things, life sciences, drug related.
Yeah, I just don't know enough about the deals that come through. Like, to me, it's interesting to get involved in the space. If you get picked off, though, like around Series A, Series B, I mean, that itself could be a good return. Nothing wrong with that, right? Just depends, I suppose it depends on how long it took you to get from point A to point B. But then, like, look, if you can participate in the upside as an investor, in like as a drug in like a Pfizer portfolio, that's interesting, right? So I just don't know. I don't know if those deals are kind of out there, but maybe they will be if something's in high enough demand, in the future. But I'll start to highlight some of this stuff. I think these are interesting life sciences companies. I'll start to highlight it more of it in the future. But let's talk Anthropic. This is a crazy story. Okay, so first of all, we hit on, I think, Anthropic last week in our kind of little AI thing. They're doing another round. They're looking at like a $20-30 billion valuation. It's like 200x revenue multiple. That's a lot, right? Okay, so I read this thing on Twitter and then I went down the rabbit hole. So FTX invested into Anthropic. They put $500 million into Anthropic at a $4 billion valuation. They led the Series B, okay? $500 million value investment. So Anthropic is looking to do 20 to 30 billion now. So that's like a 5 to X plus return on that 500 million. The tweet that I saw said that if it does happen where they get that 20-30 billion dollar valuation, that the valuation, that gain on Anthropic stock would make FTX investors whole, their creditors whole. Right, which is great. They had 8.9 billion total bill. I mean, this isn't funny, right? Like, FTX is very sad. A lot of people lost money, but I am happy if they all get their money back. That's great, right? So maybe that's the good part. But they had $8.9 billion was missing that FTX owed to creditors, right? They've identified 7.3 billion. This isn't like perfect math, but I think the 500 million was in that 7.3 billion. They're like, they may even have more now, which would be interesting. But what, like, thoughts on like FTX? I mean, FTX was a disaster. Can we all agree on that?
Disaster.
Not good, right?
No, absolutely not. No.
So terrible.
But like this
crypto momentum and blockchain and blockchain tech and VC in that area, it was a parking brake. You had a car driving with nitrous oxide and you yanked the parking brake at the same time.
That's it. But Clint, what happens if, like, because they had a whole bunch of like startup company investments, right? What if that like portfolio plays out?
Yeah, I mean, they were the rescuer, right? They came and started trying to bail out everybody too. Look, I think it's great. Anytime investors get a recovery of capital,
yes.
What I'm more curious about is that the politicians are going to give the money back, all that money that they got back, right? Is that
Fair
part
point.
of the recovery? That's because it was on both sides of the aisle. So this is a non-political comment.
I'm going to go out on a limb and say that's a hard no.
Yeah. Like, come on, where's that? So I think they're cheering on. But here's AI to the rescue.
Yeah,
AI to the rescue again. But yeah, I think that's
saving everything else.
Anything that benefits the end investor. I mean, I hate to see something like that. Everyone was in FTX, right? It was a classic case on borrowing due diligence because everybody was like, well, so-and-so was in it. So, I didn't do the due diligence. They were in it. And I think, I think it was a case of, I'm going to say Ponzi scheme, but I call them accidental Ponzi's, Ponzi finance that happens in private equity all the time.
Yeah, that's a
starts
nice
with
way of saying it.
good intentions, and the next thing you know, you're like, I'm in a hole, and I'm thinking I'm doing right, but at the end of the day, you end up creating an accidental Ponzi, and I think that's what happened here.
Yeah, it was like a bank balance sheet just managed way too aggressively, and
Way
it
too
just
aggressive.
got upside down. So
Well,
Nick, I don't know enough about bankruptcy. I'm assuming you don't because you're a very smart person, and I'm sure you've never had to deal with this before, right? But like, you know, if they make enough money through these pre-IPO stock portfolios or these venture investments that they have, then I suppose they pay off all the creditors, and then that money starts to go to the equity holders, right? I would
That,
think.
I do believe that's typically how it would function. I just wonder here how it's going to play out. It's like I'm thinking back to 2008 when you had Lehman Brothers and then you had LBIA. So I had a bunch of friends that ended up at Lehman Brothers in administration, and their whole entire job was just unwinding positions and finding ways to make good on their debts, and eventually, if there's any remaining for equity, which I don't know if there was in that case, but yeah, that's typically it.
Yeah.
Your loans get paid back, then your bonds get paid back, or other kind of lending type devices before the equity component, and that's what you'd be left with. But I don't know how it'll shake with the government intervention because I'm not clued up to that in this case.
Yeah.
But yeah, I would love to see, similar to you guys, if that portfolio just like took off, skyrocketed, right?
Yes.
Hey, we screwed up crypto ourselves, but now here is Anthropic and a whole bunch of other names in the portfolio that were all like earlier stage, outperforming the market, and I just love it. And every time you see the bio on Anthropic, it's always like the idea of like part of the company ethos is responsible AI, because they felt like OpenAI was not as responsible as it needed to be. And I kind of think it's a lot of irony floating here, the responsible aspect of things. Like,
yeah,
this
$500 million investment from
coming
FTX.
to the rescue. It's awesome.
I love it. Well, I hope everybody gets their money back. That, you know, creditors and equity holders, right? I think that would be incredible. It's also interesting too. This is literally all happening right smack in the middle of this guy's trial. This, like, you know, Sam Bankman-Fried's trial, right? And I'm hearing the lawyers now are starting to like argue, like, oh, well, you see, he isn't, like, you know, Bankman-Fried's lawyers, like, he isn't a crook. You see, like, it was just bad timing. If everything would have just happened, or it would have been okay, you know.
What about
I don't think that's gonna work.
What about Michael Lewis? Everybody was giving him some
that poor
heat.
guy.
Man, over the you know, biopic or whatever you call it.
I haven't read the book. Did you read the book yet? I haven't read it.
I haven't. I just saw some people giving him a lot of heat.
Oh, a lot of heat. I've been seeing on socials and everything. Yeah, a lot of heat for that guy. Yeah, that's tough. I mean, it's tough.
That's tough game.
You know? Yeah, man. But anyway, FTX, I just think it's so interesting when you got, you know, because there's a lot of companies out there, like Stripe's got a venture portfolio, right? I mean, a lot of these like pre-IPO stock companies, which like FTX used to be one of those, they have venture portfolios, and these things are like the sleeping giants, man. Some of these things start to pop. It could impact valuations other ways. I keep thinking back to like Naspers, right? So Naspers owned, what's the Chinese company? It's now eluding me. I should know this. Anyway, they owned Tencent. I'm sorry, Tencent. So Naspers owned Tencent, and it was like 75% of the valuation of the company was this equity stake that they had in Tencent, like South American or South African, you know, equity that trade on the South African exchange. So like it could be super interesting to see, you know, folks with you know, these big stakes like Microsoft. I know Microsoft's a giant, right? But they have a big allocation in OpenAI. If OpenAI becomes, you know, $1 trillion company, Microsoft's going to get that. They'll see some value from that, I think, in their stock price too. Right. So, anyway, interesting item. Okay. Anything else on your guys' mind this week? Anything hot in tech? Did you buy those Quest 3 goggles yet in anticipation for metaverse conversations? Anything? No?
I don't know if mine are still going to work, but it's the older version. We got to try that. You guys got to get them hooked up.
We got to do it.
We should do one of these podcasts in photorealistic avatar.
That's what I was just going to say. I'll buy you guys like Quest 3 for Christmas this year, and we can do this in the metaverse. You know what I mean?
I like that.
Come on.
It'll be fun.
If we can record it, we're going to have to do one like that.
Oh, for sure. For sure.
Very,
you know,
very,
Clint's
very
going
cool.
to show up as like a robot or something, right? He won't, he'll pass on the photorealistic bit.
Oh yeah, I'm gonna do something crazy.
Yeah, we'll show up as you, Aaron. Both of us.
There you go. That's
Yeah.
it. That'll really trick
And then let
everybody.
them pick who's who, right? We'll just all have
That's like a
Aaron.
nightmare. That's the last thing the world needs is 3 of me, right? Okay, that's good. That's good. All right, well, listen, fellas, I appreciate it. Thanks for your time today, and I'll talk to you guys next week.